I would like to remind you that I am not a financial advisor. Anything I say here is for education and entertainment purposes only. You can and will lose money if you don't do your own research. Risk management, what is it and how do we use it? Level 2, simply put, is the order book for the NASDAQ. You might be asking, what is the order book? Well, let's imagine you own a business and you are in the water industry, and the government has determined that all water sales must go through your company. There are a few companies that you allow to purchase and sell water, but there are millions of people that want to buy and sell water. You will need to have some sort of record or order book of all the orders those companies have, right? Well, if your company was the NASDAQ exchange, level 2 would be the order book for the NASDAQ. And the companies that sold and bought water are called market makers, ECNs, and wholesalers. So what does level 2 show exactly? It shows real-time bid and ask limit orders from buyers and sellers along with the size of the order and what market maker the order is being placed through. Depending on the broker you are using, the level 2 screen will look slightly different, but they all will show the same information. On the left side, you will typically have the people that want to buy shares of a particular company. This is referred to as the bid. On the right side, you will have the people that want to sell their shares. This is referred to as the ask. The bid side will have the limit orders in descending order, meaning the person that is offering to buy shares at the highest price will be on the top, and everyone placing orders at lower prices will be below. The ask side will have the orders in ascending order, meaning that the person that is offering to sell their shares at the lowest price will be on the top, and everyone placing orders at higher prices will be below. It will display what market maker the order is being placed through, and it will have a section showing the size of the order. How it is displayed will vary by broker. Some will show the true count, meaning that they will show the actual number of shares in the order, and others will show it as a division of 100, meaning that if someone places an order to buy 100 shares, it will show up as 1, not 100. Market makers or market participants are identified by their 4-letter ID. These are some of the most common participants in the market. There are hundreds of market makers and participants. Some are wholesalers, retailers, or ECNs. When looking at level 2, it's important to try and identify the axe. The axe is the market maker that controls the price action in a given stock. It's not always easy to identify and could take some time to review the level 2 before it is clear who it is. There are pros and cons to level 2. Level 2 can give a trader a sense of who is buying shares of a particular company, and if the axe is known, a trader can trade in the same direction as the axe to try to get an edge. But level 2 can be manipulated and used by market participants to mislead traders. Orders can be hidden, or large orders can be spoofed in order to give a false sense of strength in either the buy or sell side. While level 2 will show you what orders are being placed, time and sales, also known as the tape, will show you which orders are actually being filled. It will show the time or date the order got filled, the price it got filled at, and the size of the order they got filled. When the order is filled at the ask, it will show up as green on the tape, and when it is filled at the bid, it will show up as red. Depending on the broker, market orders might show up as white. These can be filled at the bid or ask price, but can normally be identified as orders that go through between the spreads or with extra decimal places. Time and sales can be used in conjunction with level 2. By combining level 2 orders and time and sales, an active trader can identify if a support or resistance level might hold. For example, suppose the share price of a company is at a support level and you notice that the level 2 bid size orders are increasing in size at that level, but the ask size is not increasing, and the time and sales shows an increase in volume traded and larger orders are being placed at market price instead of limit price. This would indicate that buyers are stepping in and buying up all the shares the sellers are placing, and that there is little power behind the sellers, or that sellers or shorts are trying to close their positions fast. And this could lead to a good risk to reward entry for a possible reversal in price. What to look for when reviewing level 2 and the tape? Well, as price approaches support or resistance levels, you want to see if there is an increase in bid and ask sizes. Is the tape speeding up, meaning more participants are getting involved in this price zone? Are large market orders going through on the tape indicating people either want to get in or out regardless of what price is doing at that time? And what is the direction of the axe? Level 2 is very helpful for an active trader, but it should not be used as the end-all be-all source for price action. Like I mentioned earlier, it can be used to try and identify if a support or resistance level might hold, or to identify the type of trading being made on a particular company. But it can also be manipulated and be misleading. It is important to use it as a tool in combination with many other forms of analysis when thinking about buying or selling stock. If you found this information helpful and would like to see more videos like this, or get notified when I release new videos, click the like, subscribe, and notification buttons. Leave a comment below if you would like to see a video on a specific topic. Thank you for watching and have a great trading week.